Hi, friends. Welcome to Career Connects that aims to deliver promising videos for your career acceleration. The questions that were discussed in this video are asked at various interviews of private limited companies and MNCs in Hyderabad and Chennai. So, these are very important. So, by watching this video, you will improve your chances of selecting in any interview in any organization. Let us proceed. What do you understand about accounting concepts? Why are they required? The accounting concepts are basically assumptions based on which the financial statements of any organizations are prepared. They are assumed as accepted across the globe to maintain uniformity in the accounting process. So that is why accounting concepts are required to bring uniformity so that everyone across the globe can read the balance sheet in the similar form. What is an accounting equation? So, this question has been asked in many interviews. For example, HP company, Shell, Chennai, and Hyderabad, two, three private limited companies, this question asked. So, at junior level, this question is must. What is an accounting equation? Assets is equal to capital plus liabilities. So this is very important accounting equation based on which if all accounting transactions will be written in the books. What do you know about marshalling in accounts? This is asked in two private limited companies in Hyderabad. Marshalling is an order of arrangement of assets and liabilities in balance sheet. Two types of arrangements are there: order of liquidity, order of permanency. Order of liquidity. In this case, assets and liabilities are arranged based on their liquidity or speedy in discharge. Capital comes at the end in this format. Order of permanency. Assets and liabilities are arranged in the nature of permanency. Capital comes at the beginning. Usually, this is what followed by companies nowadays. Order of permanency. What are the three rules of double entry bookkeeping? Answer: real account, accounts of tangible items like cash, building, furniture, etc. The rule says, means the real account rule says debit what comes in and credit what goes out. Second rule, personal account, transactions with persons, companies, or any concern. Rule says debit the receiver and credit the giver. Nominal account, relating to expenses and incomes, gains and losses like salaries, interest, rent, taxes, etc. The rule says debit all expenses and losses and credit all incomes and gains. How do you calculate cost of goods sold? This is very important question. In many MNCs, this question has been asked. Cost of goods sold. This is opening stock plus purchases plus direct material, labor and overheads, then deducting closing stock. This is cost of goods sold. What is the difference between revenues and gains? Revenues are cash flow or income to the business generated from regular company operations. Gains are additional income to the business but which are not generated from regular operations of an activity. So here regular company operations, that is the point underline. Gains are additional income to the business. What are the difference between expenses and losses? Expenses are cash outflows or cost to the company. incurred to continue the regular operations of a business. For example, production expenses, labor expenses, administrative and other expenses. Losses, on the other hand, additional cost to the company and not arising out of company regular operations. For example, loss of fire, loss of theft, loss due to damage of goods. This is very important question. Next question. What is the difference between a provision and reserve? This question has been asked in almost every interview. You will face this question. Provision is an estimated amount of all known contingencies existing on the balance sheet date. Estimated amount of all known contingencies existing on the balance sheet date. It is known liability, but the amount cannot be determined with substantial accuracy. Provision should be created irrespective of whether a company incurs profit or loss. Provision for bad debts. This is very important point. Again, you may face another question based on this point. So I clubbed it. I included that point as well in this answer. So provision should be created irrespective of whether the company incurs profit or loss. Whereas reserve is an amount kept aside from profits. This is not created to meet any liability or contingency or commitment. Reserve is not charged to profit and loss account, but to profit and loss appropriation account. To create a reserve, the company must earn profits. So reserve always should be from profits. But provision should be created either there is a profit or loss. What do you know about preliminary expenses? So two manufacturing companies interview this question. Interviewer asked this question in two manufacturing companies. What do you know about preliminary expenses? Any expenses pertaining to the formation, incorporation, registration, and commencement of the business or company are debited to an account called preliminary expenses account. The expenses pertaining to formation, incorporation, and registration, that is called preliminary expenses. The expenses such as cost of issue of share capital, stamp duty, registration fees, fee paid to ROC in formation of a company, cost to prepare memorandum, articles of association, and so on before registering the company, whatever the cost to register company, that all comes as preliminary expenses. The total of the account preliminary expenses will be written off over a period of 3 to 5 years time by debiting profit and loss account and crediting the parliament preliminary expenses account. The balance left in this account to the extent not written off is shown under miscellaneous expenses in balance sheet. So whatever extent it is not written off, shown under miscellaneous expenses. So this is very important question. Next question. So explain the concept of accrual. This is again the question asked in every interview, either private limited company or MNCs. So I faced this question number of times, and my friends, colleagues also faced this question number of times. Because this is very important concept. Even when I take interviews, I have asked this question to the students. What is the concept of accrual? Accrual accounting, wherein revenues and expenses are recognized as they are earned or incurred irrespective of whether the money is paid or not or received or not. Book into accounts when they become due, not they are paid or received. Under this concept, takes into account all incomes and expenses due but not received or paid, not at due but received paid in advance. So the due for the period is important. Whether that is received or not at received for the period within the period is not important. So accrual considers the transaction due for the period. That is bottom line. What is the difference between cash accounting and accrual accounting? Cash accounting is all about recognizing the revenues and expenses as and when they are actually received or paid. Accrual accounting, wherein revenues and expenses are recognized as they are earned or incurred, whether the money is paid or not. Book into accounts when they become due. Due is the bottom line for accrual accounting. Takes into account all the due but not received paid, not a due but received paid in advance. But due for the period is important in the accrual concept. The importance of accrual accounting system is periodicity. The system records the financial effects of transactions, events pertaining to a particular accounting period. This is the bottom line. Helps to present financial statements in a true and fair view of company's position. So every company follows accrual concept of accounting. So in interview, you may face what is the once you answer the question, what is the accrual concept, then you will face the importance of accrual accounting. So I clubbed the answer. Actually, this is two questions about accrual system. I clubbed the answer. The importance also of accrual accounting system. What do you know about a credit note? This is very important question, and really you will face in manufacturing companies. Answer. A credit note is normally issued by the seller for two reasons. When the price quoted on invoice is higher, when he returned the goods back from the purchaser because of any reason. Normally this will be reduced from the payment when purchaser makes any payment. What is an operating profit? This is very important question you will face number of times. This is net profit arising out of purely from regular business operations of an organization. This doesn't include any other incomes or expenses of financial nature, means interest on deposits or profit on sale of investments, etc. That is what operating profit. What is the difference between capital reserve and revenue reserve? Capital reserve is the reserve that is not available for distribution of dividend. This is created out of capital profits. For example, profit prior to incorporation, share premium, profit on revaluation of fixed assets. That is capital reserve. Revenue reserve is the reserve that is available for dividend. This is generated from company's regular business profits. What do you understand about operating profit and operating expense? This is also a very important question. Many interviewers ask this question. Operating profit is same as business profits, the income that eventually becomes profit. In equation form, total revenues minus cost of goods sold, labor and other day-to-day expenses which are recurring in nature. Operating expenses are, in simple term, business expenses. The funds used to operate day-to-day business. For example, salaries, rent, taxes, utilities, and other recurring expenditure. They are operating expenses. Next question. What do you differentiate? How do you differentiate depreciation and amortization? So this is very important question. Interviewer may ask about depreciation, or interviewer may ask about amortization, or you may face this question, difference between depreciation and amortization. These two are the two different methods to calculate the value of an asset over the period of time. Depreciation is an expense of an asset, physical asset. Make this point note. Depreciation is an expense of an asset for an accounting period and charged to profit and loss account, and thereby reduce the tax liability. Example, depreciation on machinery, depreciation on furniture, etc. Amortization is in the same way expense of an asset, but on intangible asset. Make this difference for a period and charge it to profit and loss account and thereby reduce the tax liability. Example, intangible assets are patents, trademarks, copyrights, agreements, etc. So depreciation is the expense on fixed assets, physical asset, and amortization is the same way expense of an asset but intangible asset. Here it is given examples of intangible assets, trademarks, patents, copyrights, etc. What is working capital? So in two MNCs, interviewer asked this question, Chennai based MNCs. Working capital is capital that is required for day to day working operations of a business. Net working capital is simply the excess of current assets over current liabilities. Net working capital equal to current assets minus current liabilities. Positive working capital is always preferable to ensure smooth continuity of operations of a business. Means current assets should always be more than current liabilities. What are the components of working capital? So in Shell, the interviewer asked this question. They are the components of working capital. They are cash, inventories, securities, accounts receivable, and payables. What is revenue recognition? Which accounting standard talks about revenue recognition? So this is again an important interview question you can face in corporate companies or big MNCs. Revenue recognition is the principles on timing of recognizing revenue in financial statements. Accounting Standard 9 talks about revenue recognition. Means the accounting standard of revenue recognition talks about timing of recognizing revenue or expenditure, particularly revenue. Next, what do you understand about sunk cost? In Shell Company Chennai, interviewer asked this question. Sunk costs are historical costs which are incurred in past. For example, sunk costs are those that have incurred for a project and which will not be recovered if the project is terminated. While making decisions, these sunk costs are not relevant in some situations. What is the BRS? Why should we prepare that? BRS means Bank Reconciliation Statements. BRS full form is Bank Reconciliation Statement. This should be prepared at the end of every month by comparing the bank balance as per cash book and that of passbook or bank statement. Why it should be prepared? So this is the right answer. Okay, if anyone asks the question why it is prepared, this is an internal control tool for cash flows. This BRS helps to detect any errors or frauds happened internally or intentionally or unintentionally. The reasons for difference between the two are identified and analyzed in a statement called bank reconciliation statement. So this word you need to mention in the answer. So in MNCs, they call BRS bank reconciliation statement as a control tool. Okay, in MNCs. So if you go and attend any interview of a big corporate company or MNC, if you mention this point, BRS is an internal control tool, then they will understand that you know everything about BRS. So this word is very important. This is an internal control tool. Here there is a question. This is asked in an interview. Mr. A has a business and he has capital of 5 lakhs rupees. He withdraws money 50,000 rupees and spend for his personal use. How do you treat this in accounts? What accounting concept applies here? So this is very important point, last point. What accounting concept applies here? The answer is 50,000 rupees should be treated as drawings. This should be deducted from capital on liabilities side and from the head a cash on asset side. This is based on business entity concept. Got it? Business entity concept. Because this question asked in one interview means treating business as a separate entity from the owner. Another question. Mr. X invested in business 10 lakhs and bought machinery for 5 lakhs. Paid 3 lakhs and remaining balance will be payable in 5 years. And in 1 year, machinery market value becomes 4 lakhs. What are the accounting concepts involved in this example? How do you show the effect of market value of the machinery in the books? In one MNC, this question has been asked in written form. So we need to answer it. The interviewer asked this question. Two concepts applied in this example, accrual concept and going concern concept. We should not show the effect of market value of machinery in the books. As per the going concern concept, machinery purchase is in order to earn the income, not for resale. So that is why we need to show the assets at cost value, not at market value. How do you measure the financial health of a company? So this has been asked in one of the big MNC in Hyderabad. How do you measure the financial health of a company to invest? I will consider the below. You should answer in this way. I will consider the below to make a decision to invest or not. Return on investment, earning per share, and debt to equity ratio. These three criteria are very important to take a decision to invest or not in any company. Which is the body or organization that issues accounting standards? It is the Institute of Chartered Accountants of India. This is very important question. So friends, thanks for watching this video. Please like and subscribe. Also write down your experience about the questions in your interview in the comment section below.